increasing your exposure is kind of an understatement. I mean, you increased it by almost 150% in Q3. I mean, there's, going all in, and then there's kind of betting the farm.
Well, you have to remember some of that is price appreciation. So Bitcoin was back at the 29,000 level at the end of May and now is up in the mid 50s. And so you're getting the benefit of that. But we also launched a ETF, CRPT, which is a sort of crypto ecosystem publicly traded security ETF. We're about to go to Abu Dhabi next week, Scott. We're going to be launching a $200 million cryptocurrency fund. It'll have some components of private equity and some components of the coins. The Skybridge Research Department thinks that Algorand actually has the opportunity to potentially flip Ethereum. And so, yes, we see this, the blockchain and these currencies as big delayering mechanisms for the economy.
In terms of Skybridge's overall assets, what percentage are in crypto relative to equities?
Yeah, well, we've got $9 billion in assets. There's about $1.3 billion in cryptocurrencies right now, and different funds vary. Obviously, we have a pure First Trust Skybridge Bitcoin fund, First Trust Skybridge Ethereum fund. So those are pure plays, Scott. If you're on our core fund, Series G, which is up just over 20% this year, you're getting the likes of Point72 and Code 2 and Dan Loeb's Third Point, but then you're also getting some cryptocurrency exposure as well. So for us, we got a lot of demand in these products right now. The firm is on an upswing. I think this was a record year for us for revenues this year. And I'm going to quote Warren Buffett, who hates crypto, Scott. He once said he wouldn't trade Michael Jordan for 4 scrubs and call it diversification.
People who get themselves into these positions where they're sitting on huge winners sometimes just rebalance the portfolio to decrease the percentage of the fund that has exposure to something that's appreciated as much as a crypto has, especially given the volatility that we may witness going forward.
You have to remember, volatility may not be a measurement of risk. In early adoption technology stories, you're going to have to set some volatility as people get comfortable with the story. But I think your point's well taken, and I think our Skybridge research team, Ray Nolte and Brett Messing, I think you know both those guys a long period of time.
And so I want to turn your attention to crypto at the moment, and we can see from the numbers that they are both in the red. Bitcoin just at 55,000, Ethereum at around 4,300.
Yeah, I had the opportunity to speak exclusively with one of the former core developers of the Ethereum cryptocurrency, Lane Rettig. We talked about the future of crypto, Ethereum, and what could possibly be the next generation of Ethereum. He told me that Ethereum is going to vie with Bitcoin to be the dominant cryptocurrency for the next 5 to 10 years. He says, in general, crypto reminds him of gold when it first started trading back in the 1970s. There was a lot of volatility, but some of that volatility settled out eventually as that commodity matured. He thinks the same thing is going to happen here. The fact that Bitcoin is supposed to be capped at 21 million units means that he thinks that the price of Bitcoin is only going to continue going higher from here. And for that, he really points to the country of El Salvador that's been buying up Bitcoin. And he says that other countries are probably going to follow suit, and there's going to be so much demand, and therefore that is really going to send the price of Bitcoin skyward. He says there's going to be a lot of bouncing around, though, in the meantime, as that proceeds. He's working on a brand new blockchain called Spacemesh. He says it's more eco-friendly. It could possibly be the next generation of Ethereum. He says that anyone who has a laptop could really mine for this and earn the points.
2 years ago, I kind of changed gears and helped launch the Spacemesh project. It has 2 key differentiators. The first, as you alluded to a second ago, is that it's greener than Bitcoin or Ethereum mining, which involves committing a certain amount of free hard drive space. So any device anywhere in the world who has, say, 100 gigabytes free on their laptop or their computer can plug that into the Spacemesh protocol and immediately begin mining and earning coins.
I want to direct our attention to the Wi-Fi Interactive, where I have our heat map for crypto, and we're seeing a little bit of pressure here. And what I'm noticing in particular, Bitcoin has actually become more correlated, that I can tell.
Yeah, I mean, it still is a very new emerging asset class, but it's continuing to trade as a risk asset. It's highly correlated with equities. And so folks that I'm talking to are closely watching a lot of the macro factors that affect equities globally to see what direction Bitcoin is going to move.
Online games, persistent world have been here for 20 years. The big difference here with the Metaverse is that on top of the game, on top of the world, there is a blockchain layer, and some transactions, not all of them, do happen on the blockchain. So you can transact with other people, you can create assets, and you can sell them, which is not the case today. But if I create an asset in a video game or in a mobile game on Apple, I cannot sell it to somebody else.
How do you think the House is going to try to frame this discussion? What is this about?
There's probably a couple different angles. The first is, how is our financial future going to be different? How is this technology changing all of our lives? How is it able to create access in different products? So I think those are going to be a lot of the key themes here. I think everyone in the industry wants clarity, certainty, and consistency in terms of a regulatory parameter and a perimeter in order to operate. I think that will really help make the industry be able to operate in a way that everyone understands from the financial services industry today. These are some big topics. There's a lot to talk about. I think we'll get through a lot of those.
You sound like it might be more of an opportunity than, say, being defensive that the hammer is going to come down.
I personally think it is. Well, certainly in the case of Paxos, we've always embraced regulation. I think we're probably the most regulated company in the entire space because we've taken a ask for permission approach from the very beginning. And we did that because we felt like this technology could fundamentally shift how the financial system works. And in order for that to happen, you need regulation. It gives a stamp of approval. It also creates a real sense of consistency. I think that it's important for there to be regulation. And what we really want is consistency, clarity, certainty. How can you operate? What are the rules of the road?
Chad, what types of regulation do you think need to be prioritized here? To your point, there are a broad set of issues. Congress is getting up to speed on this. What would you urge them to tackle first? Well,
there's a couple different components. The first is, in the crypto markets, there are assets, there are securities, and there's kind of some gray areas. Really getting into understanding where is that gray area going to fall out. And today we don't really know. We know Bitcoin is an asset and it's safe. And then after that, it starts to get a little bit more murky. Having some consistency would really help, I think, the industry in significant ways, because it would make clear what are the type of regulatory approvals that would be needed or might not be needed. There's also, I think, an important conversation today around how do you tokenize dollars and have that be safe. Presidential Working Group paper talked about this. And we've taken a tact where all of our dollars are basically cash and equivalents. They're held in U.S. Treasuries and T-bills, very short-term maturities. So there's no interest rate risk, no credit risk. Makes it very safe, and it's highly regulated. There have been other ways of doing tokenized dollars, and they might create more risks and more uncertainty. Having those types of conversations and what our different business models are and how getting them right, getting the regulation right, getting the business models right, can really be a very, very important force for change. Very important for the U.S. to maintain its primacy. Because really what's happening is our financial lives are totally shifting. It's kind of implausible now that our financial lives look so much different than the way people are living their lives in a really digital first way.